and basically trying to make money on whether the market goes up, down or sideways. So it doesn't really matter where the market goes, whereas the futures market, the farmers are the hedgers. They're the ones who are looking to protect their potential loss in, or a potential loss of their actual commodity. So as speculators, we really realise our profit if we go long in the market, and so if we buy a contract and the market moves in our favour, then we make money. If we sell a contract and the market trades lower, then we make money as well. So we can win either way. So does that make sense how that kind of all comes together? Does that, because remember, there's the longs are the buyers, are bullish, short sellers bearish. We've got the futures market, we're trading it. We can also be an investor. So that kind of is a little bit easier a way of kind of putting it all together, isn't it? We're day trading. I'll tinker around with this a little bit more, but we'll basically use that model as we go forward, and that helps us kind of piece together who all the players are. Very handy to know exactly where we fit in the scheme of things. But if we go back to our system, because remember, we're system traders, price, volume, open interest, and professionals, amateurs, that's really where we want to be. We want to make sure that we're trading based on these 4 key things. So if we stick with those 4 key things when we're trading, we've got a very powerful trading system. So we're speculators, yeah. So we're speculators with our trading system. So that really could probably come there. Where do we put that? Yeah, we'll put that. We'll just run that back there. Just want to go there. We're speculators, yep. And so we'll whack it there. That's better. So we're day traders. We're speculators. We've got a trading system, and we use price, volume, open interest, and knowledge about the professionals and the amateurs to basically make decisions on whether we buy or sell, and that determines whether we make a profit or a loss. So that's a nice, easy way of looking at it. Trading, mechanical, day traders, speculators, system trading. So we're definitely not hedgers. We're not hedging our position. But this ties in also up here because we're playing the futures market. And we're definitely not investing, because investing would mean that we were keeping our position longer term, and we're not doing that. Because if we think about it, the buy and hold strategy is pretty much done and dusted. If we look at the current financial climate at the moment, for those people who are holding, long positions on stocks, it's a bit of a slippery slope at the moment because the market's been rallying for so long. And we could see that this market, particularly after today's activity, really takes a significant belting. And you can see there that that it has done that on crude, and we're probably going to see a little bit more downside today as well. So let's just pull this back up. Now it's starting to rally back up a little bit here. So we're getting a push up. So it's down 3.84. That's incredible. We'll have a quick look at the DAX as well. DAX is starting to move lower, and you can see that it's also had a massive push lower. Oh look, I'm a little bit. I'm going to send you through, guys, some information about a guy who I've been kind of tracking for about 10 years. His name's Harry S. Dent. He's a financial forecaster, and he is probably one of the most accurate forecasters of the financial markets and basically economic trends. He's been doing a stellar job for about kind of 12 to 15 years. So I'll send you a video link to have a look at some of his stuff. It's interesting to see what's happening with the global economy and the price of oil, because we would naturally assume that oil would increase, wouldn't we not? Like if we're getting if a nuclear reactor in Japan goes under providing energy for that area, then obviously that's got to come from somewhere else. That would mean that the demand for oil, you would think, would increase. But what we're seeing is that oil is coming off dramatically. We're seeing that all the markets are basically selling off, and we saw this in 2008 when we had what's called all markets sell off, like an all the markets sell off. So gold, crude, silver, the equity markets, all the foreign markets, they all sold off simultaneously. So if you go to MarketWatch and if you do a little bit of research based on, it's called an all market sell-off phenomena. It's basically where everything starts to devalue against the US dollar. So if you have a look at the US dollar, because all of pretty much like crude, all of these markets are basically weighted against the US dollar, and when the US dollar rallies, because it's been belted for the last for at least 12 months more. And what we're going to see is potentially the US dollar rally and everything else come off against the US dollar, and that means crude, because if the US dollar rallies, that means crude becomes it becomes cheaper. So you'll definitely find that that if we see another sell-off tonight and tomorrow, that it'll be basically this all markets phenomena, which I'll get some information on as well, because it's interesting to read obviously the stuff from Harry S. Dent and also some of the Elliott Wave stuff where they talk about all markets declining simultaneously based on lack of value, true value in the equity markets, the commodity markets. They're overpriced at the moment, and what you're seeing at the moment is just a kind of a reaction, obviously, to the volatility, but also underlying all that is a reaction to the value of these markets. So, because what's been happening with the US economy is that the US have been pumping money into the banking sector to obviously